Reddit stock fell more than 20% as investors reacted to poor search performance and AI changes.
By pretty much every traditional financial metric, we're looking at one of Reddit's strongest quarters ever since going public. Their execution, literally flawless. But if you just looked at the market reaction right after the report dropped, well, you'd think the sky was completely falling. To kick things off, Reddit didn't just execute well, they knocked it out of the park. They posted a whopping Q2 revenue of $804.9 million. That completely crushed Wall Street's estimates, which were kind of hanging around the $730 million mark. We are talking about a massive 61% year-over-year growth. And to put that kind of momentum into perspective, this is their 8th consecutive quarter of over 60% revenue growth. Absolutely wild. Now, here's where it gets really interesting. This growth, it's not just about getting more eyeballs on screens. Advertising revenue alone exploded by about 64%. So what does that mean for us? It proves they're actually squeezing considerably more cash out of each individual user. They're basically transforming right before our eyes, from a high-growth social platform into this finely tuned, highly profitable digital advertising machine. They're seeing huge adoption from small and medium businesses, and their rapid international expansion is just pouring gasoline on that fire. And their cash generation? It just hit a monumental milestone. Operating cash flow practically doubled compared to last year, clocking in at $262 million for the quarter. This is a huge deal, folks, because it pushed their trailing 12-month operating cash flow over the $1 billion mark for the very first time. They are literally scaling their revenue so much faster than their operating expenses. But wait, here comes the massive plot twist. Despite all these record-breaking, genuinely triumphant financial metrics we just talked about, Reddit's stock just nosedived. It plummeted by over 20% from its pre-earnings levels before it finally managed to stabilize. Seriously, how on earth does a company completely crush revenue expectations, wildly expand their margins, and print massive amounts of cash, only to lose a fifth of its market value practically overnight? So the crucial puzzle we're trying to solve today is essentially a tale of two realities. On one hand, you've got a business operating flawlessly right now in the present. But on the other hand, it's totally juxtaposed against a market that is suddenly terrified of the future. You know the old saying, the stock market is a forward-looking mechanism, right? Well, investors completely ignored the current financial outperformance and just hyper-fixated on whether future user growth is actually sustainable. But before we can really dig into those fears, we have to understand the current financial engine. Let's move to Section 1, the profitability engine. You know how a ton of tech companies recently have shown profits just by, well, slashing their workforce and cutting costs to the absolute bone? Yeah, that is not the story here. Reddit achieved some genuinely outstanding margins, including a $253 million net income and a massive 43% adjusted EBIT margin through real, actual business scaling. I mean, international daily active users are up 28%. And get this, they surpassed $1 million in revenue per employee. That's a staggering indicator of how efficient their operations have become. Throw in the fact that their brand new AI-powered ad platform, Reddit Max, is successfully driving higher conversions, and you're looking at a business firing on all cylinders. To really wrap our heads around how efficient this engine actually is, we have to look at how incredibly asset-light their whole model is. Remember that $262 million in operating cash flow? Well, their infrastructure capital expenditures were a shockingly low $1 million, just $1 million. Compare that to AI giants like Meta or Alphabet, who are literally sinking billions upon billions into massive physical data centers. Reddit doesn't have to do that. They pour their money into engineering, product development, and moderation tools instead. Because of that unique setup, nearly every single dollar of that operating cash flow just converts straight into free cash flow. Which brings us to Section 2, the 20% sell-off. Okay, so if the financials and the cash flow were practically perfect, why the sudden crash? Well, the investor anxiety stems directly from the rapid rise of AI-generated search answers. During the earnings call, Reddit's CEO Steve Huffman actually made a pretty candid admission. He flat out stated that incoming traffic from Google, which, let's be honest, has historically been a massive funnel for Reddit, is getting, quote, choppy. As AI overviews just start directly answering the user's question right there on the search page, fewer and fewer people actually have a reason to click through to the Reddit link. And that brings us right to the million-dollar question, the single question that totally dominated the earnings call and just completely spooked Wall Street. Can Reddit continue growing its user base as AI fundamentally alters how we search the internet? Think about it.
If you rely on Google to send you traffic, and Google starts just giving users the answer without making them click your link, well, your top-of-funnel user acquisition is in some serious jeopardy. And this fear of AI search disruption, it was heavily magnified by a slight sequential drop in US daily active users, which, by the way, contrasted really sharply with that awesome 28% growth we saw in international users. Now, you might be wondering, why did the market completely panic over just a slight drop in the US? Simply put, it is a massive deal for monetization. Right now, US users generate several times more advertising revenue than international users do. So, investors took one look at this slight decline and immediately interpreted it as a massive, blaring early warning sign for future domestic revenue. On top of all that, investors were really hoping for some sort of short-term catalyst to offset these fears. Specifically, they were crossing their fingers for new AI data licensing deals, to follow up on those highly lucrative agreements Reddit previously signed with Google and OpenAI. But the complete lack of any new announcements on this front, it really disappointed the market and basically ripped away a potential safety net for the stock price. All right, let's look at Section 3, the road ahead. So now that we clearly understand this massive disconnect between Reddit's stellar current performance and the market's deep fears about the future, how exactly is Reddit planning to secure its long-term outlook? Well, I can tell you management is absolutely not just sitting on their hands. Their defense strategy is super clear and highly aggressive. They're actively funneling that massive free cash flow into building out their own on-platform search, upgrading user onboarding, and refining recommendation tools. The goal here is simple, but honestly, it's monumental. They need to transition Reddit from being a search-dependent platform, like a place you just accidentally end up at from a random Google link, into a direct engagement app. They want to be a destination you intentionally open on your phone every single day. As we watch this critical transition unfold over the next few quarters, there are 5 key metrics you absolutely need to take away from this explainer. Keep this checklist handy so we can see if Reddit's strategy is actually paying off. Number 1, we really need to see a return of US daily active user growth. 2, verifiable increases in direct app usage. 3, continued adoption and growth of their AI-powered ad products. 4, any kind of progress on new AI data licensing deals. And 5, they've got to sustain those incredible operating margins and free cash flow while they're investing heavily in all this new product development. Ultimately, Reddit's immediate business is booming. Their financial execution right now is a literal masterclass in operational leverage. But it does leave us with one incredibly provocative, defining thought to ponder as we wrap things up today. Can this community-driven platform survive and actually thrive in an internet that is increasingly dominated by zero-click AI answers? It is going to be absolutely fascinating to watch this play out, and I highly, highly recommend keeping a close eye on those key metrics next quarter.